Hello, today is Thursday. It is the 25th day of September 2014. My name is Derek. Welcome to today's chart analysis video, and it will be the dollar index, also known as the DXY DXY. And this is a index which states how the US fiat currency is doing against other major world fiat currency. So we're comparing apples with apples. There is no way you can take a look at this chart and take a look at the health or lack thereof of fiat currencies because they're comparing within each other. Also, you can throw in the fact within the manipulation of the charts, it's really hard to do that anyway. But with that being thrown aside, let's take a look at the technical analysis within this. Last year, I was talking about this pattern, which was making lower lows and higher highs, a very unusual pattern. I consider it an indecisive pattern that tends to break to one side, one way or the other, decently, which has obviously been the case right now towards the upside. When we take a look at this situation in here, this support level was taken out in the fall of last year, which thus established support right here. So now that you've seen that the pattern was making lower lows and lower highs, okay, so the pattern's changing, which it obviously would. Higher highs and lower lows does not sustain itself. So now you get to the band, does not test support, but it's not breaking resistance either. Now this situation in here, if you want to get technical on if this was taking it out, we can just draw a straight line and see that it did, in here, take out this low. Barely, but it still did, thus recuperating very fast within the range, breaking above the 18 band relatively quickly, successful support, breaking resistance. There we have it. Failed breakdown, fast move to the upside. Also within this, Fibonacci retracement. Now, granted, we're taking Fibonacci from this high to this low. Granted, if we take it to this high, these lines would just go down a bit. So this line would normally have been like here. This would be around here. No big difference, really. But with that being said, when it did come up to this level, there really was very little resistance, and it managed to continue to go higher. One of the things that I talk about within these chart videos is that when you reach the 61.8% or any key level, and it's really no resistance at all, you got to be unsurprised, or it's not a surprise, I should state, for it to have a fast move to the next key level, which is exactly what it's done, and it's also breached above that point about a 0.5% or so. The upper band, it came up to this band around here, around 82.5. So 3 basis points later, it's been riding this band for about 6-7 periods, or about a full month and change. Upper band is currently in at 85.25, which means that it is still above it. And that's why when I talk about the analysis within this, if you don't get the correction in the opposite direction, or you don't get the sideways action, then you could easily have these kind of moves that have extra volatility, and of course major upside movements when it's of course the upper band. We also come to this level, so what does that mean as far as where we were? Well, let's change the time frame up. Let's expand it for going back to the late 1990s, and we'll do that and go to the 46-day chart. So we're going back to 1996. Key is this high and this low. And here we have this 38.2% Fibonacci level, 86.81. Practically where it's at now. It's got to go up another 1.5% or so, but test number 1 comes back down without the test of support. Number 2, again, breaks down below this low here. So there's the possible failed breakdown, possible failed breakout. Keyword is possible. But right now, it's going into test number 3, most likely. For these ones, we're well below the line, not a test. At best, this is a pierce below. But when you see the situation in which it gets above it, this area would then become an area you'd be looking to support, and you would then have a target level for the next key level, which happens to be 98.5. Let's expand this again even further. We're going to go back to the absolute start of the Dixie, going back to 1971, which means each one of these time frames will have 110 days in it, which is about a half a year. So we're looking at about a 1.5 year chart. Volatility for a half a year is normally around 9.2%, but within this, it got up to about 165 back in the 1980s. Now, if you look at the interesting fact about the movements of gold and silver within the dollar index, what we can see is that the price of silver and gold was bullish in the 70s. There we go. It topped in 1980, which is when this bottomed. So the dollar gained strength, as they state, against other currencies from 1980 to about 1984-85, up to what has now been the all-time high. And the price of silver and gold was going lower. And then from this period here, where the dollar index went from 160 all the way down to here, the price of gold and silver went sideways, went lower. So even though the index got its ass kicked here, the opposite of silver, or the price, did not go up that much. From 95 up to in here, again, the price of gold and silver going sideways and down. But then the bull market started at the start of the millennium, which lasted until 2011, right in here, down move. So we've seen, of course, price action for gold and silver go down substantially because of this gain. Well, that's what they like to say. Anyway, again, same thing. Test number 3 coming in here, breaking above it, same target again. But we're also looking at this with this area that's been testing resistance here, which was a level of support in here, 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 and here. Again, overall, I don't enjoy showing these charts, but because it's got important information right now, that's why I'm doing it. After all, I'm looking at a model, a fiat currency that is debt-based, based on interest, guarantees that debt's going to be in excruciating levels for individuals, companies, and countries, which means it's difficult for humans to survive and avoid stress. In fact, stress is like guaranteed because of such. Which is why I have a difficult time showing these charts, but if the human race decides that they really do not want, if they love the fiat currency, or they totally despise the idea of trying something new, then I guess I have to respect that. And I'm saying that sarcastically, but not really, but really. Thank you for tuning in. Have yourself a magnificent day. Bye-bye.